Hello and welcome to the FF News Virtuarena. I'm your host, Doug McKenzie, and on today's very special episode, we're going to be looking at the importance of international payments and banking in a rapidly changing economic climate. And joining us, we have three chaps right at the heart of this topic. First up, we have Simon Lynch from Cymonz. Simon, how are you doing?
Very well, thank you.
That's absolutely amazing. And Simon, could you tell us a bit more about yourself and Cymonz, please?
Yeah, of course. So Cymonz is a leading technology enabler of international payments. We help banks, FIs, and also remittance companies around the globe move money. My background previously is that we actually owned and operated an international payments company. Sold that out about 10 years ago, and this time around decided that we were just going to focus on the technology stack. So to provide our customers with the best technology that we can for them to enable international payments, and with that be agnostic to the payment networks that we pay out through, so our customers can pick and choose the best payment network for their customers' needs.
Incredible. I mean, I think if there's one vertical of finance that the technology has changed the most, it's probably international payments. So for any tech question, I'm coming straight to you, Simon. Thank you so much. And also, we've got Abhish Saha from Sandstone Technologies. How are you doing?
Oh, very well. Thanks, Doug.
So I've got to ask, could you tell us a bit more about yourself as well, Abhish, and also a bit more about Sandstone too?
Yeah, sure. Look, personally, I've almost 30 years in various technologies, and the last, call it 15 years, have been within the fintech and banking space, very much focused around payment technologies, and also more recently having joined Sandstone, provide a great series of a set of solutions that focus on digital banking, so everything from mobile app through to the internet banking piece, and also bank-facing tools to help support their customers in digital experiences, along with a suite of solutions that cater to the lending side of things as well.
I think that's absolutely amazing because, I think the digital experience has, for a lot of institutions and a lot of institutions' customers, become even more critical than the in-person one. So I'm very excited to get that perspective too. Thank you, Abhish. And also joining us, we have Simon Eacott from Natwest Bank. Simon, how are you doing?
Yeah, hi Doug, very well, thank you. Very pleased to be here.
Thank you so much for joining. And for our audience as well, could you tell us a bit more about your role at NatWest, please?
Yeah, of course. I'm the head of payments here at NatWest. NatWest, a major bank in the UK, servicing not just UK customers, but also a lot of cross-border capabilities. We are responsible for approximately 1 in 4 payments that are made in the UK across all different systems and media. Wow. And service nearly 20 million customers.
That's absolutely incredible. Thank you so much for participating. Now, guys, after that, let's get straight to it. So I think I want to set the scene, and Abhish, if I could come to you first, and how have international payments changed over recent years, and what factors are influencing that change?
Look, I think international payments have certainly evolved. From back in the day, where you're sort of going in with the cash to call it an outlet to remit funds, be it to family overseas, or making, call it just a basic IMT through a digital banking platform, to moving forward to being able to use scheme rails to be able to move money from one market to another, along with a lot more players that are very much call it non-bank players that are also providing solutions that are very niche to specific segments in markets. So it's certainly been moving quite rapidly, along with all the regulations and everything else that have to become quite serious in relation to AML customer.
Yeah, it's a fascinating ecosystem now that we've gone from almost confrontational ecosystem with fintechs and tech companies almost looking to supplant the banks, but then obviously we're now entering this phase of connecting together with fintechs, tech companies and banks working together to support that customer journey, and I think that's very exciting. And then the regulatory aspect that you mentioned too, that is ever changing with international standards as well. So Simon Lynch, if I could could ask you as well, do you agree with Abhish there in terms of some of the factors that are influencing the change in the industry? You said you were, in international payments business 10 years ago. What have been some of those changes?
Yeah, for sure. So I think that I, agree with Abhish's comments there. First and foremost, there's a lot more options now for consumers out there to make their international payments. It's a lot easier to self-serve, and it's almost becoming more like a domestic payment feel for the end user as well. And what I mean by that, they can self-serve online, they can do it 24 hours a day, 7 days a week. And they've got good predictability over their payments as well. So there's a lot of different networks out there now that you can deliver international payments through. It used to be just really the SWIFT network, which, could be sometimes slow when it's hopping through many banks and won't have predictability on how much the end beneficiary is going to receive. So we're seeing a lot more of those payment networks come in now. And also this embedded as well. So that, we talk about, banks offering the service online, the fintechs, but then also a lot of the marketplaces out there now is also embedding those payment rails into their platforms.
Yeah, I think it's fascinating, and I think we should bring up this panel podcast itself is pretty much across the entire globe itself. And when we're looking at international banking and we're having to send payments, I think the phrase is more than 24/7, 365, because when you look at certain time zones, people are entering a different day before the West Coast has even entered it. So the time has never been harder for those financial institutions to keep up with some of these developments. Now, with that in mind then, Simon, Eacott, when you look at your business customers, your retail customers, what have been some of the pain points when making an international payment?
Yeah, I think like the other guys have outlined, it is a complicated area. It's growing massively. The world has got a lot smaller. It's much more interlinked. But traditionally, if you look at the way that payments were made using the correspondent banking network, it could take a long time to move. It's very complex, varied routing, different regulations across the jurisdictions. Data wasn't flowing. Legacy technology, time zones, all the things which we know and love. And that did lead to and continues to a degree to higher cost, more complexity, low transparency, and a little bit of uncertainty. And to some customers, that's reconciliation issues, that's trying to find where your payments are. But huge strides have been made, whether that's through changing technology, it's the growth of real-time systems, there's more interoperability now across different payment systems. And SWIFT, which Simon Lynch mentioned earlier, has made great strides in improving transparency and service levels. But it's undoubtedly a complex area that has caused pain points, but the real explosion of technology, of new user experiences that is a combination of banks and indeed fintechs has made significant improvements.
Yeah, it really is. I think it's a vertical that has probably changed more than any other part of finance in the last 10 years, after maybe a bit being slightly stagnant in the past 2 decades. So we've now discussed, obviously fintechs, we've now discussed the financial institutions, but obviously a huge part of that is that payment rails, as you mentioned, Simon, Eacott. So Abhish, if I could come to you, and with such established payment networks, like we've mentioned SWIFT already, could we ever see new competition again, potentially even smaller players? Are we going to, is there room for more niche players?
Oh, look, I think we're talking international payments. It's as big as a market as it gets, really, right? Covering the whole world.
Yeah.
And there's, be it localized, sort of needs, for maybe regional areas versus solutions that go cross border in terms of the typical sort of trade routes. I think there's always room for more players, always room for more competition, and having worked with financial institutions in the African region, in the past career, it's always interesting how little bits of innovation can always, create something in one country, and that all of a sudden it impacts the neighbouring countries in a positive way in terms of being able to move money and move it fairly quickly. But look, I think overall, both the Simons mentioned SWIFT, and they've been a dominant sort of player in the space for many years, and they continue to grow their capability set and moving with the market. And I think the likes of the Visas and the Mastercards certainly have always been in the game in some way, shape, or form, and I think they'll. I wouldn't say they're new competitors, but they're evolving competitors as well.
Yeah.
In that space in terms of being able to funds. But it's again, very niche, and I think part of it's also, I think, the cost side. I think having worked with a lot of corporates, particularly businesses around supplier payments across borders and things, the cost side is certainly something that leaves it open for competition to be able to come in and compete.
Yeah, it definitely
there's a business case there.
Yes, yeah, I completely agree. I mean, especially after what we saw with Visa and Amazon earlier in the year as well, we're seeing this a dialogue almost when it comes to finding that cost balance. And Simon Lynch, with that in mind then, do you think we're going to see a big, I know we had Ripple for instance, but do you think we're going to see a new competitor of that size anytime soon with all this market disruption too?
Yeah, I think that, across the board, from the large players all the way down to the smaller ones, that we're seeing more and more available payment networks. You talked about Visa, and they've launched, their B2B Connect product, which, is business to business, tokenized on blockchain essentially. And they're trying to put that in as a competitor in the market. And then they've, also, purchased companies like Earthport, which was, I think, originally a UK company that has really good local clearing ability as well. Yeah. And I know that they've got a huge network of banks, obviously, that they're already connected to, and having a lot of conversations in that space. So I think you continue to see that. And then all the way down to the smaller end, we've got a customer in South Africa, uses our platform for foreign workers, sending money home throughout Africa. And one of the pain points there is money into Zimbabwe. So we're right now building out our own payout network. Wow. In conjunction with them in Zimbabwe, and so it's just at the smaller end of how that's happening as well. And then Ripple, it's an interesting use case. I think that we'll continue to see a lot around that, around stable coins, etc. Whether we're going to need them, I think is still up for debate. Where players like Swift and Visa and stuff, move to more real-time payments. But I think you're still going to see a lot of experimentation in that area to see how we can actually move money. Using some of those stables as well.
Yeah, it is interesting to see that dynamic between the trad and the new methods. So, Simon Eacott, with that in mind, then, we've kind of talked about how the industry is changing, but with that in mind, why has it been taken so long to evolve in the industry? What are the frustrations when it comes to dealing with international payments? What are the blockades there?
Yeah, I mean, it's a great question, and listening very closely to the previous questions in terms of competition. Payments generally, being a network business, is going to always be complicated. It needs to be safe, it needs to be resilient, it needs to be reliable every time, and those requirements are magnified when you go cross-border, because you're going across jurisdictions. You've got different regulations, you've got time zones, you've got liquidity challenges, you've got credit challenges, and you've got the need to make sure that you are absolutely robust in terms of financial crime as well. So all these things add to the complexity. The value chain is huge. You've got many different connections. So I think the competition piece and the way that it develops is partly about the rails, as we call them, in terms of that infrastructure, and that's where the resiliency needs to come in. That's why the likes of Swift are so important, networking 10,000 odd banks. But technology and the new ways of doing things will help drive some of that innovation. But it is about pulling all those things together, looking at customer pain points, frankly, and that's where some of the competition comes in terms of some of those overlay services. And the two guys have spoken eloquently about some of those capabilities. But the pain points around data being addressed through initiatives like ISO 20022. So rolls off the tongue, but it standardizes. It standardizes payment messages. It means that you can get a lot more straight through processing. The speed of transaction is increased, the transparency is increased, and the ability to do more with the payment. It is more about the message. So I think it's all of those things, Doug.
It's a perfect storm, is it? Well, Simon, Eacott, if I could stick with you just for a second then, and then look at your customers' journey there. Do you think we're going to start seeing, for instance, with the ISO 20022 standard, I know, for instance, in Australia, the bank's already looking at attaching invoices to payments off the back of the enhanced data. Do you think you're going to start seeing your customers demand these new payment kind of experiences? Is that going to be something that we're going to be seeing soon?
Yeah, I think so. Although they probably won't necessarily refer to it in that way. I mean, customers don't necessarily get out of bed in the morning thinking I need to make some payments today. They live their lives, they trade, they buy a cup of coffee. So it's much more about, you talked about the experience. It is embedding the payment in the customer's business, and standardization of the data will undoubtedly help that. You talked about the Australian experience. In the UK, we're doing the same thing with the new payments architecture, which will enable not just fast and instant payments, but much richer data. It will enable more services to be developed, not just by banks, but by the whole ecosystem, which is opening up as well. So it really is moving at pace, and it's about more than just the underlying transfer of value. It's what you do with that and how you embed it in the customer experience.
Yeah, it can't just be innovation for innovation's sake. It really has to be measured because of those regulations that we brought up earlier. Now, Simon Lynch, I think banks are contending with competitors, for instance, as you mentioned, tech companies as well. There is obviously these profit margins that Abhish mentioned earlier as well. When it comes to cross-border payments, there is plenty of disruption to be had without legacy. So what's the reaction been now that we're entered this ecosystem where payments can be done by a company, not just a bank?
Yes, I think that obviously that we've seen a reaction out there already, with some customers already moving away from banks and banks becoming maybe a little bit concerned about that. But I still believe, and I still think that one of the problems with that is that if I'm a customer, generally I want to do my banking with a bank, and international payments is a key part of that experience. And when I actually transact away from my bank, I'm adding another hop as well for me. So I need to get the money from my bank account to the provider that I've used. So a lot of those providers, provide really good services and have brought down cost. But I'm seeing the banks, react on that. And then also the banks on the technology side are starting to offer that technology out to their customers to keep them, with inside that bank ecosystem when they do international payments. So I've definitely seen a shift in the last few years where we see more and more banks sort of seeing this as a core piece of their offering and something that they want to keep their customers engaged on as well.
Fascinating. And I think you make a really good point there that we don't often discuss, in the fact that there's an extra step if you want to go outside of the bank. And if people are time poor, and going back to what Simon Eacott said, it's no one gets up in the morning and thinks about making a payment. That's not what people are thinking about. And so to be able to have that all embedded into one institution, I think there's a use case there. And Abhish, could I also ask, you mentioned as well, like the global market share of this industry is the whole world. Effectively, everyone needs to make a payment. So do you think that these competitors, these tech companies, these payment companies are eating up market share directly from the incumbents? Or is it actually just the fact that the market share is increasing? People are becoming more aware of international payments and international banking. And as a result, there's far more room for growth and more competitors in that regard.
Well, I think there's quite a few different drivers in terms of demand for international payments, and obviously migration and travel are probably two key ones, and obviously the B2B supplier sort of payments element. And I think in terms of the competition, there's just so many different segments you can go for, that the use cases and the requirements are quite different. And I think from using a bank-based solution where you're doing your digital banking through one to Simon's point around, through the one portal, and then being able to do other things within that portal, particularly from a business perspective, your staff are in there, your users are in there doing other things. Jumping around, becomes quite a frictionful experience, if you can put it that way, from a productivity perspective.
Yeah.
And I guess the eating up of the market share element, albeit there may be some there, but I think it's the reach of the solution that really makes a big difference when you're looking at frequent users. So yeah, there's two styles of, I guess, users we go macro level, and that's the frequent users of international transfers and the ones that are less frequent. And I'm sure the two Simons may disagree or agree with me. It's the frequent users that are the ones that are really impacted with the extra hop, because it really does impact their their bottom line in terms of cost, as well as the staff side of things. And so
I imagine liquidity as well for small medium businesses too. If there's that extra hop, as you mentioned, then that payment might not come to them immediately, and suddenly that could spell danger for so many organizations. That's a really fascinating angle.
That's right. But around cash flow and also the cost of the hop, how we'll manage the other spot rates that are happening, particularly around supplier payments. Some of the tickets are quite large, so how do you have control of that? And with new players against, can you log in, pay all your suppliers across the regions that you're working in, or are they very limited, because it's again a limited network that they operate or may operate under? So it's another productivity item.
So with that in mind then, Simon Lynch, I mean, you can't own every good idea. And I mentioned earlier in the conversation how we've gone from a kind of, I remember when TransferWise, we're still TransferWise, and everyone's like, oh my gosh, this is going to be incredible. People send money, and why go to a bank? We're now in a different dichotomy. We're now seeing banks partnering with tech companies. You can't own every good idea. So Simon Lynch, what is the opportunity right now for both the tech companies and the institutions to work together for the customer?
Yeah, of course. I think there's like a couple of opportunities there. So, speaking in our own book, is that we're a technology provider. So we reckon there's a, real big opportunity for banks to be able to find the right technology fit for them that's off the shelf, so they don't have to go and build it themselves, and it's easy to integrate with their systems. And then, Simon mentioned before also standardizing that data. So we're talking about ISO formats, etc. So I think there's a big opportunity there that, the quality of the data in, quality of the data out, which really means that you can start to connect to other payment rails. I think there's also an opportunity for the smaller size banks to really partner up with some of the fintechs that are already out there and established. But I think that it gets to a level there where they're still actually potentially giving away their customers to someone else. It's their brand, but it's been given away for someone else. So we do see a little bit of pushback in there in the market.
Interesting. And Simon, Eacott, I've got to ask as well, because I know NatWest, you guys work intensely in improving your technologies, but also, I know you guys also do a lot of work with fintechs here in the UK. How do you see that partnership ecosystem evolving?
Yeah, it's really important. And I think you said, you used the TransferWise example early on, and in those days there was a lot of sort of looking at each other as threats. But banking and payments in particular is incredibly complex, as we've spoken about. The ecosystem is very extensive, and so you do need to work with partners. We do see the value of that. Whether it's collaboration or partnership, or at times it's competition as well. And you need to know which hat you're wearing at any particular time. But at NatWest, as you say, we work with a number of partners, whether that's embedding other propositions into our own customer journeys. And indeed, we've recently announced a partnership with a company called Vidino around embedded finance, where we're looking to be able to offer more banking as a service, payments as a service. It's about being where your customers are, being on the platforms that they're on, and making the payment at the back end of it almost incidental. You've got to look really, really hard at the entirety of the customer experience, the customer journey, and see where your own strengths are, the parts that you play as a bank, whether that's trust, settlement, lending, or whatever, and the value that other partners, fintechs or otherwise can bring.
Yeah, I mean, I think that's it's absolutely fascinating seeing this combination of embedded finance, creating banking as a service, payments as a service, software as a service, to ultimately lead to this invisible payment journey that personally I think would be amazing. As you said, Simon Eacott, earlier on, no one gets up and wants to make that payment. So I think that's going to be absolutely brilliant. And Abhish, if I could come to you, and look from Sandstone's perspective as well, because I know that you help institutions with that digital transformation. So I mean, we've talked about how it can help small banks, for instance, who might not have the capabilities to do everything in-house. What's that perspective? How do you treat that?
Yeah, I think that's where partnerships are extremely key. You don't have the ability to build your own networks, or having come from a bank in the past, there's bilaterals and agreements you need to have with so many players. Even if you're using a common set of rails, you need people to manage that. Reconciliation and issues that happen, people to manage that. So operationally, there's a lot of moving parts, and then fraud and sort of monitoring on those sort of elements. That's again, even if you had staff there, you need staff that are well qualified and experienced in that sort of space to really manage the risk around it as well. If you try to in-house all of that, you're starting to really build out a department or multiple departments on their own. So from a smaller bank perspective, this is where partnerships come in quite critically, and if the partnership ecosystem that you're bringing on provides you firstly with the front end that sort of manages all the dozens and dozens, maybe hundreds of nuances that you have on the national payment for a user, be that business or retail, and then obviously partner that can help with the network, the access to all of the other endpoints that your consumers want to be able to send their money to, and a partnership around that, and obviously the other monitoring component around making sure that your users are doing the right thing and not the wrong thing. So there's quite a few opportunities there to go best in class, as opposed to trying to build everything themselves and really eat into a lot of the business case and the opportunity. And I guess the other upside is time to market. You get there quicker. You should get there quicker with the right partnerships. Interesting.
Now, with that in mind, Simon Eacott, I'm going to come to you, and I'm going to split this question into two, but I'm coming to you for the first part. And Simon Eacott, what are the opportunities? Abhish was kind of mentioning a few, for instance, the speed to market, but I also want to get a customer perspective from you, Simon Eacott, if I can. What are the opportunities for your customers to embrace this new ecosystem, to embrace this new way of making international payments and international banking?
Yeah, absolutely critical, and you wouldn't be surprised to hear me say that the customer is at the heart of everything that we do. We look at the end-to-end customer journey. It's about understanding their pain points. It's about understanding what their business is, what part payments plays in that. It's not about just developing the new technology, developing and some shiny new thing. It's about doing the basics right. It's about making things seamless, frictionless, or indeed adding friction when it's appropriate. So to protect the customer in terms of the bad actors that are out there. So it's bringing all of those things together and making it very much part of that day-to-day experience, doing the right thing by the customer. And if you're relentless and focused on that, then you'll be doing right by all stakeholders.
Absolutely amazing. And as a customer, it would be it's just absolutely brilliant to hear some of these opportunities and knowing that it is the customer is at heart going forward. And then Simon Lynch, if I could come to you then and look at the reverse, with this ever-changing climate. I mean, we go from news story to news story every day that it seems just absurd. So what's the stake here if you get the transformation wrong?
Well, I think the stake there, if you get transformation wrong, especially in the banking side of things, is that you start to, we've had banks come to us that want to implement a new technology stack. They're not looking to make more money out of it or anything. They just want that customer journey to be great and to retain that customer as well. And because they're saying that, it's a core piece of banking, and once they have one customer move away from that customer then just plants that seed in the head. Is there actually other stuff that I can pick up and shift to another provider in the market as well? So I think that, that's from, the banking side of thing. I think if you don't actually get that customer experience right, but then also importantly, the back end, there's so much regulatory requirements around this area as well. And, in Australia that we've seen some, pretty large fines that relate to it. reputation for the bank as well. So I think it's really important that, that to get that customer journey really good, that you actually focus on making sure that you have everything, in the back end correct. So, as much straight through as you can, but with all the regulatory checks, the right reporting in there as well. And, also, as Simon mentioned, the protection of customers as well. So, especially with international payments, it's, very hard to get an international payment back. So, making that customer journey flow nicely when it looks good, but then putting those right checks and balances in as well.
I think that is a good place to end it, because I think we've heard from Simon Eacott there about the positives. Now we've heard about what needs to be done and measured to get to that point, and it's not easy trying to do that. So guys, I got to say a big thank you for all your insights, because as we've heard, there's regulatory compliance issues, there's tech, but ultimately the customer is at the heart of it. The customer now has these demands, expectations, and it is actually a really exciting opportunity. So I've got to say a big thank you to all three of you. I hope you've enjoyed yourself. Thank you once again, and with that in mind, I think we're coming to the end. So I've got to say a big thank you to you, and also our viewers. You can catch the rest of the series and much more over at ffnews.com, and of course YouTube, but especially LinkedIn, where you'll see me in the comments. Abhish, Simon and Simon, thank you very much, and goodbye.